Let's start off with the economic data from last week and move into what's happening this upcoming week and the type of trades that we can take a look at. So starting off with last week, let's take a look at the UK first. We have Bank of England's Governor Bailey speaking, and then in pre-London session, we had some claimant count change and some more unemployment data that came out. Overall, when you take a look at where we're sitting historically for this claimant count change, which is people claiming unemployment related benefits during the previous month, we were sitting at a pretty low level of 5.5K. We were expecting an increase up to 15.2, but we only saw an increase up to 14.1. Taking a look at this data, historically, we're sitting at these pretty low levels. When you narrow it into the 4 years range, you can see that we're still sitting at these pretty low levels, which is a good thing. So even though that the UK is in a recession at the moment, a lot of investors are starting to ignore that as the UK pound is set to resume its run as one of this year's best performing currencies, despite the UK's economy being in a recession. The reason for that is all the economic data that we saw coming out last week, where we saw that the UK business survey implies activities picking up. And then we're also seeing retail sales data on Friday that posted the biggest monthly increase in almost 3 years, the labor market still being resilient, and also Bank of England maintaining those high interest rates. As we continue down into further of last week, we start to see CPI data coming out. So this number does not mean that CPI is pretty much sitting at a flat line or that it has started to decrease or anything like that. This actually means that the inflation is still continuing at the same rate as it was the previous year, since this is CPI year over year. In order for CPI to reduce back down, or for us to say that inflation is not increasing, we would need to see negative numbers here, as we saw in PPI input. So here we start to see a negative 0.8%, PPI output, you saw a negative 0.2%. This actually means that inflation is reversing on the producer side. It's starting to slow down on the producer side. If this number was sitting at 0%, that would not mean that inflation is at zero. It would just mean that there hasn't been an increase in inflation since the previous year. So this just means that on this year over year CPI data that came out, inflation is still increasing at the same exact level as we were last year. On the PPI side, the input, this is the change in price of goods and raw materials purchased by manufacturers. As it's sitting at a negative number, this means that producers are purchasing their raw materials or whatever else that they need in order to produce their product at a lower price than they were last year. Same thing on the output. This is essentially both of these are going to have a trickling effect onto the consumer side. If the producers are paying a lot more in order to produce their specific product, and then they're selling it at a higher price. So if PPI output, for example, came out at a higher number in a positive percentage, that would mean that they're selling it to the retail side at a higher price. The retail side, in order to recoup those expenses, they would be selling it to the consumers at a higher price. So that's what we see here, where we're seeing a trickling effect, essentially, where PPI input and output, the previous couple of months or so, or even last year, they were sitting at positive numbers. So that's what we got to see here. And if you click on more, then that's where you get to see where for a few months we had positive numbers coming out. That was a trickling effect that's trickled over to the retail side. Hence, we are starting to see those positive numbers when you look at the previous compared to the actual. So the forecast, I tend to ignore that a little bit unless I'm, trading that session and I'm trading the sentiment leading up to that. But when we're looking in retrospect and we're looking at the facts, the factual numbers are the previous and the actual. So I'm looking at that 10%, 10.7 back in August, and then we saw a drop down happening to a 9%. This still means that there is inflation. It's just that it has slowed down just a little bit instead of accelerating at the same exact percentage. Then we start to see a slowdown happening again at that 9.1% in October and coming out to about 8.9%. And then same thing for the following few months. So you are starting to see that inflation is accelerating at a slower pace than previous, right? And that's the trickling effect that we're going to start to see onto the CPI side, where you are going to start to see lower prices coming out onto the CPI, or the lower percentages coming out on the CPI side. After that, again, we had a Bank of England Governor Bailey speaking. And then as you continue down, you saw GDP data coming out and the prelim GDP coming out as well. So when you look at the prelim GDP, this is the change in the inflation adjusted value of all goods and services produced by the economy. When you take a look at all this data, for the last few years or so, you start to see how, for the most part, we have been sitting in these positive numbers, which is exactly what you want for a growing economy. And then we start to dip down into these negatives in 2020. Of course, that was around the COVID times. And then again, we start to see a dip down happening starting in August, going into November. You start to see a 0% movement whatsoever. That means that GDP was remaining at the same exact level. That does not mean that there was no production happening. That just means that it was sitting at a 0%. That means it was still sitting at the previous numbers that we saw. And now we start to see a dip down happening again in that negative 0.3%. Same thing in this GDP month to month. You increase that out. Let's take a look at more. So same thing here in 2020, we start to see a massive drop down. Then you start to see economic activity picking up again in the latter half of the 2020. And then again, we start to see some dip downs happening in 2021. You start to see economic activity starting to pick up a little bit again. And then you start to see those dip downs happening again in 2023, then coming into July and even September. And then after that in December, and the new economic data that just came out, we're sitting at that negative 0.1%. Now, as we continue down into the second half of last week, you see retail sales. So we start to see a 3.4% increase, which is a good thing from that 1.5 that we were forecasting. That means that the activity is starting to pick up here. So that's what that article is referring to, where the business service implies that activity is picking up. Retail sales posted the biggest monthly increase in almost 3 years. So this is very important, right? Where you start to see that demand is starting to pick up in general. So when we look at the max, as you guys can see here, a lot of economic activity starting to pick up after about 2022, you start to see a lot of activity starting to pick up. We saw a dip down happening, last month. This month we saw a rebound, essentially, that happened. So that's on the UK side, right? And then let's take a look at the US side. So we have had a lot of geopolitical news coming out. We saw the war in the Middle East. We saw, Russia and Ukraine war, which has been priced in for the most part. And now it seems like the sentiment is still that there are eyes being kept on the war in the Middle East and seeing how that plays into the overall earnings that are coming out on the US side. So as we continue down, there are certain things that we're watching out for, the expectations of the US economy, whether or not it's growing, and then the Federal Reserve cutting rates. I personally do not think that they will be cutting rates in the coming months. I do think that they will be maintaining it at the same exact level, if not higher. When we take a look at the economic data, I'll go ahead and explain that entire breakdown as well. The geopolitical backdrop is a risk. That's what we have. Also, the sentiment that still continues. And then as we continue down here, we start to see that the biggest two risks are the consumer goods companies and the data that's pretty much coming out from the consumers, which is CPI and even the PPI data on Friday, and then also the geopolitical tension. So those are the two main things that are playing into inflation. So the reason for that is because when there is war or there's any sort of geopolitical tensions, they tend to play into the new price pressures, especially into oil. And the reason for that is because whenever you're going to war, you're using up all these resources. But again, you want to keep in mind the basics of economics, which is that supply and demand. So if you have low supply, but there's high demand for it, which tends to increase in the middle of a war, then that means that you're going to see higher prices, right? That's the very basics of economics. So that's essentially what's going on when it comes to the macro fundamentals onto the US side. Let's go ahead and take a look at the economic data that came out last week for the US. So starting off with Tuesday, we had CPI coming out. That's what a lot of investors were looking at. When you're looking at core CPI, that this is change in price of goods and services, excluding food and energy. So energy including oil, right? So we're starting to see that there is an increase in CPI. We're sitting at that 0.3%. We were forecasting an acceleration in CPI at the same exact rate, but we saw a 0.1% increase instead. So that means that inflation is still increasing. That feeds into the same exact sentiment of, the Fed not cutting any sort of interest rates, at least in the coming months, but instead maintaining it at the same exact level that they're at right now. And if not, having another rate hike potentially, depending on some more of the data that we're going to see in this coming week. CPI month to month, this is including food and energy. This is the general change in price of goods and services purchased by the consumers. So we're seeing that we're sitting at that 0.3%, still accelerating at the same rate and pretty close when you're looking at the CPI year over year. Continuing on into Thursday, we start to see core retail sales coming out. So we're starting to see this dipping down. And we're also seeing retail sales in general also dipping down into the negative, and then also unemployment claims that came out on Thursday. So core retail sales, this is a change in the total value of sales at the retail level. So what we have is the demand starting to drop down onto the retail side by the consumers. So that kind of helps with easing up the pressure that's been on the demand side of the economy, coming back down and meeting the supply levels that we're at the moment. So when you're looking at, again, the basics of economics, when you have less supply, but there's a higher demand than the supply that's available in the market, you start to see prices increase. But as we start to see negative numbers, this means that retail sales is starting to drop down and it's starting to decelerate instead of accelerating, which helps with, the numbers that the Fed wants to see, and eventually having a trickling effect onto the CPI side, onto the PPI side, and ultimately, in the latter half of the year or so, having those discussions again about any sort of potential rate cuts. And then going into Friday, you have PPI coming out. So you have core PPI month to month. This is excluding food and energy. This is onto the producer side. So the change in price of finished goods and services sold by the producer. So this is going on to the retail side. We're starting to see that there is inflation onto the producer side still. PPI month to month includes food and energy. Same thing there. You're starting to see an increase overall from what we had expected. So as of right now, there's a lot of inflation that has to be controlled by the Fed in the US. So there's not enough optimism to talk about any sort of rate cuts or anything like that. Now let's go ahead and take a look at what's happening this upcoming week. So last week was quite economic data heavy, as you guys just saw from the breakdown. And so now in this upcoming week, the first New York session that we have is actually going to be a bank holiday from the US and Canada. So I do expect tomorrow to be a lot slower than last week. And then you have the monetary policy meeting minutes. So definitely keep an eye out for this if you're trading anything related to the Aussie, because this is going to give you a good understanding of what can we expect and where is the Reserve Bank of Australia sitting, right, in terms of their monetary policies and their outlook. Tuesday, I expect things to pick up a little bit, especially if you're trading, the Canadian dollar. We have CPI coming out from Canada, so definitely watch out for that. And then same thing for the UK. We have the monetary policy report hearings. This is going to help you understand what's the outlook like when you're looking at the Bank of England. As we continue down onto Wednesday, things pick up a little bit more for the US dollar with FOMC meeting minutes. Same thing. It's going to give you a good understanding of what's the outlook like, and especially when we have a lot more Fed officials coming out and speaking and kind of giving us an outlook from their perspective as well. So keep an eye out for that. And then Thursday is really when I expect things to pick up even more. So there's a bunch of PMI data that's coming out from the Euro, from GBP, and then also on the US side, you have unemployment claims coming out once again, and also flash manufacturing PMI and services PMI. Going into Friday, things start to ease up a lot more. And then the last Asian session of the week, it's a bank holiday. So I do expect this week to be a little bit slower compared to the last few weeks that we've already had, especially as we're sitting at these key levels. Onto the technical side for a lot of these pairs, it's very important to understand, what are the limitations of your trade. So for some of these pairs, I have the key fundamentals here. You can pretty much copy paste this across, GBP, JPY, or even Euro JPY. We're sitting at pretty close levels. The only thing on the yen side, from a fundamental perspective that I'm watching out for is Bank of Japan's outlook. They're talking about increasing interest rates for the first time in many years. And so what kind of effect would that have? Bank of Japan has already intervened into the markets the last few years multiple times. So, and we have seen the effects of that already. So kind of just keeping an eye out for that. But as of right now, from a technical side, if we're looking at the quarterly time frame, GBP, JPY, I am watching for price to come back and tap into these previous areas. Right now, from a fundamental perspective, we don't have anything that's stopping price from pushing back up into this area. The yen is still quite weak. And then on the UK side, CPI remaining at that 4%, PPI starting to decrease back down, retail sales starting to pick up. So we are starting to see a lot of nice economic data that's coming out that's helping us understand, what's happening with the UK's economy in general. So that's the first level that I'm going to watch out for, price to come back and tap into this 192.500 area in the coming weeks or so. And then that is when I would be watching out for any sort of important fundamentals. That's going to be the main driver as price starts to tap into these zones here. The next area that I would mark off would be the support that the current quarterly is holding on to. And if you look to the left, you see how this entire zone in general has been respected as support, many times, and there's also been consolidation within that area as well. So after a nice bull run from this 2012 and then a nice bull run up here, we respected this entire area pretty much as support, nice bottom wick, and continue breaking above this. After that, we start to come down here, but notice this top wick rejection here. So I want you guys to pay attention to that as we start to drop down to lower time frames and what has pretty much been going on right into this area. So we will start to see more consolidation as we drop down to lower time frames here. And that's something similar of what I'm expecting as price comes back and revisits this area again this time around. So when you come onto the monthly time frame, so again, you start to see consolidation. This is that top wick that we marked off on the quarterly time frame. So you had a price drop back down here, hold on to a nice support, push back up, nice top wick rejection right there, rejecting the buyers, and then the following candle brings us right back down, breaking below these areas and coming right back into this area in general. So that's what we're starting to see here as well, where as price breaks above, you start to see consolidation. Can we start pushing above these areas? So that is a similar move as to what I would like to catch, somewhere here. If we can continue pushing up here, hold on to this area as some sort of resistance, and potentially that is when we could start to see more fundamentals kicking in from the UK side and also from the yen side with Bank of Japan, Bank of England. Those are two main fundamentals I would be watching out for, or any sort of other macro fundamental catalyst, right? So this level is going to be very important, and fundamentals are going to be the drivers here. So as we continue to push up and tap into these areas, can we catch a similar move as price starts to retrace this massive bullish momentum and this uptrend? Come onto the weekly time frame, so you start to see that there's still a lot of nice bullish momentum here. So when you're looking at the structure in general, once we break past this entire zone that has been created right here, so once we break past that, we come back, we revisit this area multiple times, right? You start to see a lot of wick rejection support being formed, same thing, wick rejection, but we maintain this bullish structure right here. So we have still not broken past this bullish structure. Instead, we see even a nicer rally up. So again, we start to respect a new high right into these areas. Just looking at the structure in general, new highs in the sense that we break out of all this consolidation, we consolidate out here a little bit, and then finally we break above that, respect some new highs, respecting another previous resistance area support. Finally, we get a nice little break and retest here, continue that massive bullish momentum, and we don't slow down until we tap into this higher time frame key level once again, respecting it as support, but at each point still creating new highs, right? So even at this point, as we're trying to break above, still trying to create some new highs here. So that's what I would like to see in this new upcoming week. Can we continue that momentum bullish? And if we can see some sort of a potential bottom wick rejection, just to respect some of these previous resistance areas as support and continue that bullish momentum coming back into this zone of around 190 to 192,500. Let's go ahead and drop down to the daily. We'll go ahead and tighten up that zone later, but the very first thing what I would like to see is if we can continue respecting this area as support, and if we can continue that bullish momentum to the upside. So we have come back, we have broken the new highs, we have come back and respected this area support. A lot of sellers who got rejected here, the following candle broke the highs. So the last daily candle had left a nice range here. So now with the new daily candle, can we continue, making some bottom wicks, rejecting this area and holding on to a support, and then continue that bullish momentum? Again, to start off this week, we have some bank holidays, and then you have the monetary policy report hearings coming out on Tuesday from GBP. So I do expect price to, calm down here a little bit compared to last week, maybe see some potential consolidations that are happening on the lower time frames, but a lot of corrective movement from the massive movements that we've seen last week, right? Let's go ahead and take a look at US30. It's the same thing here, some key fundamentals. The sentiment of Fed cutting rates, again, they have not cut any sort of rates yet, but there are sentiments out there of the Fed cutting rates. But I personally do not think that's going to happen in the coming months. I do think that they're going to maintain the rates that they're at right now, if not have another rate hike because of the increasing inflation that we're starting to see. We're starting to see that retail sales are dropping down, which is a good thing. It kind of eases up the pressure onto the demand side of the economy. You have the unemployment claims and PPI also increasing. So same thing here where we are sitting at those all-time high levels. So I'm going to mark off the top wick of the current quarterly candle. That's our current range that we're watching out for, so that 38,870 area. I'm also going to mark off the previous high, which is right around this area here. Now, as we drop down to the monthly, we start to see a lot more price action. So in 2020, ended up making an all-time high before that pullback that happened in early 2020 because of COVID. You start to see another rally up happening as we're starting to tap into these areas. Once again, you start to see another corrective move. This is also driven by fundamentals around this area as well. Pull back down, push back, consolidate out here, and then we start to see a nice support area being formed. Each of these key levels, fundamentals was a very, very important driver of the markets. But also from a technical side, you can see how clearly we're maintaining a bullish structure, but every time we start to consolidate, as we're tapping into new highs and we're starting to generate more liquidity, how do you know that there's liquidity, right? So we have talked about this multiple times already, but for example, last time price tapped into another liquidity area, which was right about here, that 2020 all-time high that we just saw in higher time frames. Price came back down, closed right into that area, respected as support, corrected this entire bullish momentum that happened, and the following candle barely left a small range and then continued that bullish momentum. Came back up into these previous consolidation areas, consolidated out, same thing, respected that area as support. As you can see, we failed to break below this area, right? And then the following candle takes us right back up, continue that bullish momentum. And then the last 2 months is really when we start to see a slowdown happening in the volume, right? Once again, you're sitting at all-time high levels, but there's also a ton of economic data that has been coming out the last few weeks, and also the anticipation of what is the Fed going to do, which is going to have a huge effect on US30 as well. When we finally break above that, you start to see a support being formed here once again. Even with the slowdown in the volume, you start to see some consolidation forming here, and then finally a nice bullish push up. 2 weeks ago, we had a nice doji close, respecting those previous highs. Last week, we tested the same exact highs, broke the lows, still respecting this area as a resistance. So just to help you guys visualize this a little bit more, we have that entire zone that's being respected as resistance. So this week, we have this entire range that we can still come back and fill. What I would like to see personally is price to come back down this week and respect these previous area of resistance as support. So at a bare minimum, come back down and tap into these areas. A nice top wick projection, come back, respect this area support, maintain that bullish structure that it's in overall higher time frames, and then continue its momentum right back up. I don't think it's going to break past that 38,870 just yet, at least this week. What I would like to see instead is price pull back up, revisit these areas, and then potentially look for a deeper pullback into this 36,397 area, 36,400 area, right into this area, and then continue its bullish momentum from there. So right now, a lot of the movements that we saw in the past 2 weeks or so was because of the economic data, but also a lot of the market sentiment around what is the Fed going to do with interest rates. So just to narrow this up a little bit more onto the daily time frame, as we're starting to see more price action, again, price consolidates out, holds onto a nice support, pushes back up. And so if I were to really narrow into this price action, what we're going to see is a nice bullish momentum overall, right? And then also price holding onto a nice resistance right into this area, even though it's consolidating, breaks above it, you get a nice little break and retest, nice momentum to the upside. And then at each point, we're still seeing the previous resistance areas being respected as support. So same thing here. We respected that as support, continued the bullish momentum back up here. And then the last daily candle, a little bit of a top wick, came back down and closed at the very bottom of its range, showing me that there's a lot of seller's pressure at the moment. So another thing that I would like to see here is come back as close as possible into this area, make some sort of a top wick, and then continue its momentum back to the downside. So on a daily time frame, we have some nice day trade opportunities and even some scalp opportunities, pretty much. I would like to see price clear out of this area, come back, tap into this level right about here, look for some partials, continue its momentum down right around here. But I do think that this is going to be a very important level as we're looking for our trade opportunities. So for scalps, I'm looking for price to make a top wick and then continue its bearish momentum. take some partials around here, and then you have more potential trade opportunities as price comes back down into this 37,200 level. When you go onto the 4-hour, you start to see cleaner price action, and you start to see how important these levels are. So once again, a lot of price just tapping into this area, good volume, taps into this area, you get some pretty good volume, and it comes back, revisits this area, ends up creating a new high compared to the previous one, consolidates out a little bit, finally get some good volume, creates another new high, pulls back, support, breaks above new high, and then you start to see that nice bullish momentum coming back into this range of 38,800 until we tap into this new high of that 38,870, and then a massive sell-off just to reject the sellers down here and then push right back into that zone once again. Last 4-hour candle of Friday, we got a nice top wick rejection, pulls back down with a lot of sellers pressure. So even here, same thing, where I would like to see price clear out of this area, give me some nice top wick, continue down, and that's the sell opportunity or some potential scalps that can be taken advantage of, and then you have a nice cleaner move coming back down into this range. Let's hop over to gold. So with gold, I'm going to mark off the current high. Let's just do 2062. And then I'm going to mark off the previous resistance. This is my range for this week, and then also going into the following week with any sort of potential scalps to swings. So here we have price coming back up. This is in 2011, 2012. We started to see all of this rally happen because of that recession that we were in. We start to see better economic data coming out. And then after that, a pullback down, a corrective move of this entire bullish run up that happened after the recession was announced. And then you start to see a lot of consolidation, another nice bullish run up, end up breaking past these previous highs. And in 2020, this is around the COVID time, right? Then we start to get news about vaccines and the Fed stepping in and providing more stimulus and all that type of stuff. And then price pulls back down. We start to see some consolidation. But another thing that I want you guys to notice about this price action here is even though price broke the previous highs, came back down, respected this entire area, previous consolidation areas as support, push back up, created a little bit of a new high here, as you can see, pulls back down, another area of respect, of support, and then continues and closes above, and then pulls back down, ends up creating a new support into these previous resistance areas, and then finally we get the volume to push past this and tap into new highs. So at each point, we have ended up breaking previous highs, and we have ended up creating new highs, which gives me enough indication that there's still a lot of bullish volume here. Now, what I would like to see here is price pull back a little bit, respect these previous areas as support as each of these levels have, correct some bullish momentum here, come back, tap into these areas, respect this area as support, and then continue its bullish run up, coming back, revisiting potentially into these 2050 to 2062 areas, maybe potentially some more consolidation up here before we get some more economic data and a clear understanding of what's the Fed's outlook. When you come on to the monthly time frame, so you start to see that price action a little bit more clearly, just to mark off those previous levels once again, came back up in 2020, created a new high, pull back. You see all this consolidation here. We tap into the same exact area here once again. Then you start to see a nice corrective move coming back, respecting that 1600 area, which if you look to the left is also going to be a very important level as we had marked off on the higher time frame. Pull back up, get that nice bullish momentum run up, and then ended up creating a new high. We failed to continue that bullish momentum. Instead, what we do is come back and grab some more liquidity from this previous consolidation area here, right? And then finally we break past that, ended up creating a new high, and this month made a nice top wick rejection, push back down, and rejecting into these previous resistance areas here once again. So far, we have all the indications from a technical perspective that the bullish run is still there, the bullish momentum is still there. When you drop down to the weekly time frame after creating those new highs, price pulls back into these areas once again, and then rejects that 2062 area once again, holds on to a resistance, and then last week we had a nice top wick rejection, and then price pulled all the way back down into these previous areas right here, rejected that, and ended up closing above this area. Take a look at what pretty much price did right here. So previous resistance before a nice pullback, and then finally a bullish run up. Same thing here. This candle rejected right into this zone before it ended up closing bullish to take us right back up into this 2062 area. Comes back down and rejects into this area multiple times before closing right here. So obviously this is a very important level. Any sort of trade opportunities, I would look for it below this 2000 mark, and then look for some sell opportunities coming back down into this 1967 zone right about here. And then after some clear indications is when I would look for a deeper pullback. But overall, we're still in this bullish momentum. We still have that bullish volume, but I would like to see, as PPI came out and all the economic data that came out last week, and now this week we have the FOMC meeting minutes, then you also have a lot of the Fed officials who will be coming out and talking, and then you also have the PMI data that's coming out. I would like to see a deeper pullback into this 1960 areas and tap into these previous areas of consolidations, of rejections, grab some more liquidity, and then look for a pushback up into this 2062 areas. Come on to the daily. Onto the daily time frame, same thing, a lot of rejections while price is still consolidating right about here, finally breaks above, and then pulls right back into the same area again, and then a nice bullish run up once again with a lot of volume, creating new highs, pulls back, consolidates into the same exact area until it taps into that 2062 area. We fail to break above that, and then we start to see a deeper pullback into this zone of around 1820 to 1840, and then after that you see a nice run up. Once again, you have that entire bullish momentum, and really we start to see price fail to break above this 2000 mark once again. Then it has a nice pullback right into these previous consolidation areas, and then a run up to create new highs, and closing right at that 2062 area before a pullback, and then after that coming back and rejecting the same areas once again. But after that is when you can start to see a retracement happening into the market. So what I would like to see onto the daily time frame and even the 4-hour time frame is price respecting this area overall as resistance, maybe even a deeper retracement back up here to grab some more liquidity, some top wick rejections, and then a sell-off happening at 1967. So I would look for any sell opportunities between 2000 to 1967, and then after that some more retracement between this 1967 and 1960, and then continuing back down into this 1940 to 1920 range, which is this entire area. So about 1925 to 1940, where price has respected this as support and then as resistance before it started consolidating, came back, and then you can see how there's a lot of price reaction pretty much as price taps into this zone. So potential retracement back into this area is what I would like to see for a longer term trade. And then a nice bullish run up to come back and revisit into 2062. When you come onto the 4-hour time frame, all that consolidation, a nice rundown that happened on Friday and then held onto a support, consolidated here a little bit again, and then after that you start to see a little bit of more messy price action before there was a nice bullish run up, and then we ended up closing like a doji on the last 4 hours of Friday. So now what I would like to see is what the new candles are going to be forming this week, some nice top wick rejections, and then continuation down, even potentially even a pullback here in Asian session, grab some more liquidity. That would be my personal preference, to come back into this area and then continue that bullish or bearish run down into these zones and then catch a better trade opportunity here. So that's it for this week. If you guys have any questions, feel free to reach out on Instagram at SharmaFX.